Hey everybody, this video is sponsored by IGUS LLC. I'm Rob Booker, and we're going to take a look at the currency market and the week ahead here. So I'm sitting here on the couch, looking at the charts on the iPad. So I'm kind of doing things a little bit differently today. You can leave a comment below and let me know that you liked it or didn't like it or whatever else. But what we're going to do is we're going to skip over here and jump on the charts. And what I'm doing here is I'm going to draw all over these charts. The iPad makes it kind of easy to draw all over the charts. And I'm looking at 4-hour charts in the currency market for, well, I'm going to be honest with you. There's a couple of currency pairs that I have some open trades on that aren't going well, and I want to walk you through what those look like. So this is the Euro Australian dollar. It's the 4-hour chart. And you can see here at the bottom here, we've got two bullish divergences. Those red lines there denote bullish divergences. At the same time those divergences occurred, the relative strength index was oversold in both of those two places. And then we've got what I call three profit circles. These are early warning signs that the market wants to go up, even though it hasn't yet. Early warning signs that it wants to do that. And then it's rounding out here at the bottom. I don't know, it's like a bowl-shaped bottom here. If you combine the divergences with the profit circles with that bowl-shaped structure, I really think that what you get is a pretty great combination that says we may be moving upward on the chart in the near future. And there is a great combination of two things on the charts. My friend Mike Bernick talked to me a couple of weeks ago about the volume weighted average price. That red line you see running through the chart, that's the volume weighted average price. That is a glorious target if the market starts to move up. If the Euro Australian starts to move up, that is a glorious target. That is a great. And it lines up perfectly with a missed weekly pivot from around that green level there from around April 13. I think it wants to go to 1.7400. And if it breaks above the highs that it's making right now, 66.85, if it breaks above those highs, then I think we're going to go all the way up. And that's like a 500, 600 pip move at the least. And I think as many as 700 pips of movement. Then you also have here the possibility that we break down below 164. If we break down below 164, the bottom has dropped out of the euro, and then there's some crisis in Europe or some really, really terrible thing that has happened. So I already bought the Euro Australian a couple of weeks ago. And so now I got to go back in, I got to wait for the chart here, and I'm going to add a little bit to my position and add to what will hopefully become a winning trade. And that's the Euro Australian. The other one I want to look at is the Canadian dollar Japanese yen, strongly tied to oil and on a rip-roaring move upward over the course of the last couple of weeks. Last 3 weeks, in fact. And you can see here from the beginning of May upward, this has been a pretty significant, pretty savage, pretty specific, and pretty obvious bullish trend. Now, we've got a bullish profit circle at the start of the trend. We've got a bearish profit circle here, but we've only got one. This trend probably has more room to go up before this is done. What we want to see, however, is a momentum break above 78.50. If we can move above 78.50, the trend is intact, the higher highs are in place, and that's going to put in play 80.50, 200 pip move, pretty easily up above. We won't really touch any move downward because this trend seems to have just gotten started. So the Euro Australian downward trend, that's been mature and it's already started to roll over. It's got multiple bullish divergences and whatnot. This one, however, has no bearish divergence and no recent bearish profit circles in multiples. That means I think that the Canadian dollar Japanese yen has the potential to move up even farther. And so what we want to do here is on a momentum break above 78.5, what we want to do is target maybe 100 to 200 pips of movement going upward. It's not a surprise, and it's kind of even more interesting to me that what we're doing right now is we are kind of riding along the volume-weighted yearly price right there, and that would be a really interesting place for a pullback and a bounce and then a move higher. Also really interesting to me, we haven't even yet seen a missed weekly pivot on this chart. And in a trend, we usually miss at least one. So I wouldn't be surprised if next week this thing takes off and we miss next week's pivot, and that's a savage trend. You get a piece of it above that 78.50 level. So are we supposed to say any other risk disclaimers or other types of things, or I don't think we're supposed to say anything else.
No, they said all statements made by the influencer about IG must be based on actual results. Basically, statements should be able to easily sustain. Statements such as results are not typical, results may vary, and are not actual.
Okay. So I'm still recording my screen. You can switch it to, we can briefly show the homepage of IG Markets.
Okay.
Once again, this video is sponsored by IG US LLC. Thank you so much to our sponsor. Remember, with all of these charts and everything, past performance is no guarantee of future results. These trading results are not necessarily typical. Trading involves a substantial risk of loss. Any of the above or all of the above risk disclaimers. Love you all. Thank you so much for watching. We'll see you next time.